Today we're looking at Microsoft, and the big question is simple. Is this stock finally a buy, or is it still too early? Before we get into the dashboard, here's the backdrop around the stock right now. Microsoft reports earnings on April 29, so the market is getting close to a major catalyst. That matters because a lot of the focus is still on Azure growth, AI monetization, and whether Microsoft can keep proving that all of this AI infrastructure spending is worth it. There is also some added pressure from the UK, where competition authorities said Microsoft has significant market power in cloud and business software, and flagged cloud licensing as a competition issue. That adds another overhang around the stock. So, that is the bigger picture. World-class business, strong AI positioning, but still real questions around spending, cloud expectations, and sentiment. Now let's move to the PreTradeIt dashboard, because that is where this gets much more useful. Everything I'm showing here is from the PreTradeIt dashboard. The whole point is to cut through the noise and look at the actual setup, the risk, the positioning, and whether the stock is really in a good place right now. On the dashboard, Microsoft is trading around 373.60, and the current trade check is wait, active, short bias. Confidence is moderate. Setup is marked very poor, and overall cross-horizon risk is high. So straight away, this is not showing up as a clean long entry. The positioning is also weak. The dashboard shows Microsoft trading below the 20-day EMA, below the 50-day EMA, and below the 200-day EMA. The stock narrative is bearish, and the key constraint is technical. So even though this is still a strong business, the chart is still damaged, and this is where people usually make the mistake. They see Microsoft down, they know it is a great company, and they assume that automatically means buy. But when you look deeper into the PreTradeIt dashboard, the picture is split. On the fundamental side, Microsoft still looks very strong. The dashboard shows 16.7% revenue growth, 59.8% earnings growth, a forward PE of 19.66 versus 23.3x trailing, and strong margins including roughly 39% profit margin, 47.1% operating margin, and 68.8% gross margin. So the business quality is still there. But the technical side still looks weak. The dashboard shows the stock about 1.5% below the 20-day EMA, 6.7% below the 50-day EMA, and 16% below the 200-day EMA. It is also down 26.4% over 6 months and has badly lagged the technology sector over that stretch. That is not leadership. That is still repair mode. PreTradeIt also flags broader risks here, including price to sales at 9.1, highly polarized sentiment, and elevated overall risk. Timing quality is mixed too. Short term is favorable for a short setup, while swing is marked overextended. So this is still not a great place to get emotional and rush into a long just because the stock is lower. So the real answer is this: Microsoft still looks like a strong business. But the stock setup still does not look clean. That means this is not a buy it because it's Microsoft situation. If the stock starts reclaiming key trend levels and the setup improves, that changes the story. But right now, the dashboard is still saying caution. And that is exactly the point of PreTradeIt. It helps you see the trend, the setup quality, the risk, the positioning, and the fundamentals in one place before you commit capital. So if you're looking at Microsoft right now, the better question is not just, is it cheap? The better question is the setup actually good enough yet? Right now, based on the dashboard, the answer looks like not yet. If you enjoyed this breakdown, drop a like, subscribe, and let me know which stock you want me to cover next. And if you want to explore the data behind this analysis for yourself, check out PreTradeIt using the link in the description. You can sign up and use it for free.